Hey YouTube, how you doing? I'm Stijn and welcome to my YouTube channel. Today we'll be talking about Palantir and their fourth quarter results. I aim for this channel to be no bullshit and I won't just hype this talk. And I'll try to supply actual value in this video. I'll supply said value by first talking about what Palantir actually is and does. After this we'll do a deep dive into Palantir's fourth quarter results and I'll try to explain how awesome their current financial position is. Thirdly, we'll talk about the effect of the lockup period happening next Friday, which is February 19th. And lastly, we'll talk about my actual buy targets and price predictions. Let's go. So first, what is Palantir? In short, Palantir is a software company that's active in the big data sector. They have three products aimed at large companies. They are Gotham, Foundry and Apollo. With these products, they basically leverage the power of their customers' expertise, empower their decision making and scale their competitive advantages. And in doing so, they form the digital backbone of tons of enterprises and governmental institutions. Some examples of these sectors they already operate in is the energy sector, the automotive industries, military, financial sector, science sector, the health sector, etc, etc, etc. Basically, in dum-dum words, they use the data a company already gathers, make smart connections this company could never hope to achieve on their own, and help them in their decision-making process. This all they manage to do by leveraging both AI and human strengths. This is something truly powerful. A great example we'll use to understand how Palantir can be powerful is through the example that is Airbus. Airbus gathers millions of data points every flight. In fact, so many they could never dream of analyzing every data point of every flight. Therefore, they only analyze this data when something bad happens, through the black box. But what if you could use the data even when things go right, to increase fuel efficiency and to increase safety, both at the same time? Well, Airbus would need to invest billions of dollars in R&D to create such a capable artificial intelligence system. Or they could just hire Palantir, who will become operational in just hours and can help you create extremely powerful decisions, not just when things go wrong. But Palantir is also active in the governmental sector. As you can see here, they are one of the only Impact Level 5 SaaS, or Software as a Service, for mission critical information of the US national security systems. Moreover, they are in trial to become the first ever Level 6 impact software of the Department of Defense, meaning they are seen as safe enough for the highest classified secrets of national defense levels. Wow. This tells me they make both extremely useful and extremely safe software. Therefore, Palantir has a massive competitive advantage in the big data sector. Now that we have a better understanding of what Palantir actually does, I would like to talk about the fourth quarter results. Even though I was hoping for a surprise profit, in hindsight I couldn't be more bullish about their results. Here's why. For Palantir to be truly successful, they would need to penetrate the commercial sector as deeply as possible. Specifically, Palantir should be aiming big and should aim at every large enterprise worldwide using Palantir software in the future. I believe the CEO, Alex Karp, has got his perspective right on this matter. In their presentation they talked about the following metrics. They penetrated 8 of the largest 100 companies in the US, 12 of the largest 100 companies worldwide, and 24 of the largest 300 companies. Just imagine how large Palantir could become if they managed to penetrate into the inner workings of all these large enterprises. And I truly believe they can do so, since they deliver so much value. Alex Karp managed to even further my trust in him. Here's why. To explain this, I would like to talk about their partnership deal with IBM. IBM announced they are launching a new product offering that leverages Palantir's Foundry platform to supplement the IBM Cloud Pak. Awesome! In doing so, both these partners are total winners. IBM gets access into the awesome systems Palantir designs, and Palantir gets direct access into IBM's massive sales force of 2,500 people, which is more people than those that work at Palantir entirely. In 2020 alone, they grew the average revenue per customer at 41%, meaning they went from $5.6 million to $7.9 million average per customer. This is awesome, since this tells us that their customers are becoming more and more dependent on Palantir's software. I think this is stellar news, and if Palantir manages to grow the average revenue per customer as well as the total amount of customers, both these trends can act as a two-engine system that compounds and compounds to great heights. As to the number of customers, in Q4 alone, Palantir closed 21 deals which were worth $5 million or more. Of this 21, 12 were worth $10 million or more. Damn, if that doesn't tell you they're growing exponentially, I don't know what will. Now to their revenue. They generated around $1,093 million of revenue in 2020, which is up 47% compared to 2019. Out of this revenue, they managed to get a gross profit of around $740 million for the year of 2020, which is a whopping 68%. And at the end of the day, they only managed to get a net loss of around $1,166 million, which is quite a big loss, especially knowing that's twice as much as their loss in 2019. But I believe this to be just an accounting trick. Practically, Palantir made profit during the year that was 2020, while growing like an absolute maniac. And here's why. Look at the bottom line, and do you see the stock-based compensation? Well, to reward their employees and therefore retain their competitive advantage, Palantir paid said employees $1,270 million in stock-based compensations. This is seen as an expense, therefore subtracted from revenue, fair point, but if we exclude this one-time stock compensation, Palantir would have made a profit over 2020, and especially the fourth quarter. So onto the lockup period. In early 2020, Palantir, instead of doing an IPO, did a direct listing, meaning they made the shares already owned by shareholders of the company publicly tradable. They did this instead of just creating new shares and selling those, which is what happens during a regular IPO process. In doing this direct listing, they helped you and me, the individual investor, since during an IPO process, the large hedge funds normally go first. But in this scenario, we all got the same opportunities. During this direct listing, Palantir obliged themselves to sell just 20% of their company's shares, and effectively locking up the remaining 80% up until upcoming Friday, the 19th. Therefore, only a small percentage of Palantir was tradable up until now. Some investors are, rightfully so, a little wary. This is because more traded shares probably mean a higher float, and a higher float could result in more downward pressure, so a downward movement of the stock price. In my opinion, this is little to no concern. Most of the employees could already trade up to 20% of their shares, and therefore they could already take profits if they wanted to. Logically following this, I don't think a lot of profit taking will happen next Friday, since Palantir insiders know better than anyone how powerful their software actually is. But some downward movements is still to be expected. Just know that after the final bump in the road, the only way for Palantir is up. I think the stock will be very volatile this week, since investors hate uncertainty. Just know that this volatility could result in great buying opportunities, since I believe in the long run the stock will multiply. Why I believe this, I'll explain now. That leaves me, as promised, to the price predictions. Keep in mind that these calculations are not very precise, but are meant to give you a good enough ballpark figure as to where Palantir could go in the following decade. For these calculations, I assume the following things. A revenue of $1.1 billion in 2020, which is true according to their fourth quarter results. I also assume they can continue to grow at 30, 40 or even 50% for the low, mid and high case scenarios. And I give all scenarios a time period of about 10 years to grow. After this, I use earnings margins of 30, 40 and 50%, which is fairly doable for a SaaS, so software as a service company, once they get out of their hyper growth stage. And I slap on a P ratio of 40, 80 and 100, which are all very doable in tech. For proof, just look at Snowflake and Tesla. All this eventually results in a share price of $105 on the low end to around $1,800 on the high end. This tells us that if Palantir managed to grow at just 30%, which is quite conservative compared to their growth of 47% in 2020, a share price of $105 is totally in reach. That's a 3.5x return in just 10 years, or an easy 10% profit a year compounded for a period of 10 years. But remember, this is just on the low end. On the higher end of the spectrum, Palantir could grow to become an absolutely massive company with a potential market cap of maybe even $1 trillion. Knowing this, I believe Palantir is a heavy buy under $30 per share and a light buy under $35 per share. As a reference, Palantir makes up around 15% of my portfolio in shares and about 5% of my portfolio in long-term call options. I bought Palantir at a cost base of around $23 for my shares and around $25 for my call options. To summarize this video, Palantir is an amazing company with a great management and a large competitive advantage. Therefore, I think Palantir could become a $1 trillion company in their lifetime, which would be a 20x return from today's prices. But for this, you need to be patient enough. I really hope you guys enjoyed this video and got something valuable out of this. If you did, please give it a like and maybe even subscribe. Comment down below what you want me to talk about next, and I'll see you guys in the next video. Peace.